I think I'm actually recording the class. I hope. Yeah, I am. So let me share my screen again. So I'll also be making this. I'll have to compress it again. So what are key levels? Okay. Now this key level is something actually very deep, and if I want to explain it right now, it might take a very long time, and it has to do with Malaysian support and resistance, which is almost like a different strategy from what we are trading. But how I learn is that whenever I see something I like, I get to learn it and then I improvise it into my own system. Okay, now a lot of things I taught you, including disruption, were not what my mentor taught me. It was experience that taught me, and I came about it by constant backtesting, front testing, and also learning from other people. Aside my mentor, I have learned different things from other people, but the only difference is that I fix it into my system because I cannot change a strategy. My strategy is pure structure and liquidity. Every other thing I trade are just add-ons inside my strategy. Okay, so this key level I'll be explaining to somebody trading Malaysian support and resistance. It might sound a bit different from their own explanation because they might be explaining it based on Malaysian support and resistance and their own strategy, which is their Malaysian stuff. Okay, so I am putting it into structure and liquidity, and this is based on my own experience, not a public view. It is what I have tested and has given me a good win rate. I have gone back in time and I have seen that it worked. That is why I am teaching you. Now I was supposed to teach this by end of month section by July, but because everybody keeps asking every time I take a trade on that entry model, everybody keeps asking what entry model is this, what entry model is this. So I decided that let me just spill it out. Okay, so it's not complex, it is just very simple. Now what are key levels? Now key levels are possible areas in the market where price either bounce from or reject from. Okay, there are possible places in the market where price either bounces from. When I mean bounce, I mean like a support. Now if this is a line, talking about bounce, I mean if price should get to this place, it should react and go up. Then talking about rejection, if this is a line, if price should get to this place, it should reject from this place. Now a lot of people trade counter trading. Now counter trading is not bad, it is other people's system of trading, but me personally, I cannot tell you not to trade counter, because the last time I said that, a lot of people dragged me that some of my students are trading counters and they are profitable. Then I had to rephrase and then I said, based on your own experience, because I cannot stop you from trading what has made you a lot of money, because the main purpose why we are here is not to draw charts, it's to make money. Okay, so if with your own sections you have actually made money trading the opposite trend, fine, go on with it. Okay, now in these key levels I do not trade the opposite trend. Every time I trade in any entry model, any entry model I use, I make sure that I trade in line with the structure of the market. Let me just a minute, let me check the Telegram group with my phone. I hope if you can hear me. Please, if you can hear me, just say you can hear me, or just say hi or something. Okay,
Yes,
you
we
can
can
hear
hear
me.
you. We can
All
hear
right,
you.
fine. So
We can hear you. We can hear you.
all right, so I talked about the key levels. Now these are possible places where a reaction may likely occur. Now the time where they were teaching candlestick, I know most times you guys have been taught something like this. Okay, where there's a candle and then both candles are on equilibrium, like they are on the same line. Now it is said that in key levels, if you want to get a candlestick reaction for a sell, okay, price has to break a support. I don't know if you understand me. Price has to break a support. Now let me rephrase again, because most people might not. Can you hear me? Can you hear me, please? Can you hear me? Hello, please. Can you hear me? I think people cannot hear me. I don't know. If you can. Please, if you can hear me, just say you can hear me in the group, please, so that I will know. Can you hear me? I'm texting. I'm texting the group. I don't know if you can hear me, anyone. Okay.
I hear you.
Okay. So now,
See your screen.
Can you see my screen now? Can you see my screen?
Yeah.
Okay. In key levels,
Yes,
it is said that a support broken becomes a resistance. Yes. A support broken becomes a resistance in key level. Now, what do I mean? For example, now when there are equal highs like this, okay, it is said that price is supposed to sell from this point. When price gives equal highs like this, in line with the market structure, okay, it is said that price has to come up to this point and then sell from here. Fine. But because of the uncertainty and the low probability in this, then came about the Malaysian support and resistance, which is key levels, which has to do with this support. This is a resistance. This is a resistance for now. This is a resistance. Now, let us use this one we are using should be like the buy. Okay. Now, it is now said that resistance broken becomes support. Now, initially we ought to sell from this point, but the uncertainty of selling at resistance is the probability is very low. So instead, what has a better win rate is resistance broken that turns support. Now, how can a resistance be broken? It has to be broken with the body of the candle only. As these two equal, the candles have to be equal. Their wicks can be longer, fine. Their wicks can be longer than each other. They might not be on the same line, fine. But their body of the candles have to be on the same line or slightly different, at least like this, but not something very noticeable. Okay. Now, this thing has to be broken by a body of another candle. This has to be broken. If it breaks like this with a wick, it is not counted as what I am talking about. Okay, it has to be broken with the body of the candle. Now, when the body of the candle has broken it, now the next candle may likely form, but me sometimes once this is broken, because after this breaks with the body of the candle, price moves, gives me some move up before coming back to my entry. But mind you, this works in line with market structure, and once one of these fails, the rest will not hold. if you are focusing on this entry model, if you're focusing on mitigation block, then you know the rules as well. If one fails, the rest may likely not hold. The same thing applies to this. Okay, so now these two highs over here should be taken out with, I am recording, should be taken out with the body of the candle, these two highs. Now when this happen, what is it called? It is called resistance broken, because initially I told you that two equal highs could be seen as a resistance. Sale can be taken from like this, but because of the uncertainty of this, that is why it is being called key level, which is resistance broken that turns to a support. We now buy. Fine. So the opposite of it is also for sales as well. You also have, okay, let's just go into the chart not to waste so much time. So I'll be giving with all the examples that I've gotten. In your own time, you can also go and backtest it and tell me whatever you've got. So you know this should be in line with the trend of the markets. So far so good. On gold, this particular price action, we had I think from here down to this place is an inducement. Okay, and the book structure here, why am I not counting it as a one candle, is because of okay. I just remember something. I think we had this here. No, sorry. I think I'm seeing a very small internal that was formed. Okay, that's fine. So now price took out this guy. Now I was talking, before I continue, I was talking about reclamation. And sorry for diverting. There's a mistake all of you make. For example, now you want to, let us say this is disruption, and you want to reclaim this point of interest. First of all, looking at this this last demand candle here, you would see that this candle already is mitigated by this. So reclaiming this now looks somehow. If price takes it out, let us say you want to now buy to reclaim, where if you put your entry, let us say you put your buy entry here after price comes here. But the problem is that most people are not trading a live account. That is why they just do anything they like. If this is the protected low, can you put your SL below this low? That's the question you should ask yourself. This is about 4,000 something pips. You know how many dollar this is on lowest lot. So we are using our realistic trading experience. This cannot be reclaimed. These are what I'm telling you, that some things you have to learn it on your own by experience. It is not even my mentor that taught me key levels. I've said it before. Disruption, I did not get that from him. After I learned, I took my time to add everything I've learned together. He was the one that taught me structure and liquidity as a whole. That's why the strategy I trade is structure and liquidity. But experience gave me more of these things I am explaining to you. Okay, people say yes, you need a mentor, but at a time you are your own strategy. I posted about that. You are your strategy. Why? Because your own experience is different from the next man. By my experience, there is nothing on earth that will make me to try to reclaim this, because I know that my SL cannot be here. So for the fact that my SL cannot be here, it means what? That this point of interest cannot be reclaimed. So now we this point of interest is taken out, and then what's next? We had our reclamation. Our mitigation here. Because of key levels, I've traded less of mitigation block. Not like they are not working; they're actually working. But why I've traded less of them is because I see more entries with higher probabilities on key levels, but I still merge the two of them together, because most times too, I still have better entries with mitigation block that also aligns with key levels like this one. But the only thing here is that, okay, I will explain. Let me get to that. So now, for example, now talking about these key levels now. Now some people mark just this. I told you he has to break with the body of the candle, so this guy is not valid because this was the week. Now some people will mark all of this because these are the two candles that made up this mitigation block, this key level. So it depends on your own risk, and if you want to stack or not or whatever, depends on how much you have. Okay, but by key levels, the two candles that makes up that key level is where it's considered as your protected level. But if it's too big like this, the truth is that I may not want to risk all of this. Okay, so fair enough. But the rules of key levels is that, just like mitigation block as well, if one fails, every other one fail. I don't jump from entry model to entry model. If I decide that now I'll trade key levels for some time, and then if there's anything I observe, I'll take my time to watch out again, backtest, and then see the entry model to use for my next trade. Okay, so now after that, this guy got taken out. I think this was it. Then we had the thing is it's on broker. This particular thing is not here. This thing, like in the broker, which broker is this safe? Like this thing is supposed to be one. The time I analyzed this 8 cap, this thing is one, and the next that followed thereafter was I think it is this. Yes, there was no this, so the disruption was actually this. So that was why I took this sale. There was nothing like this, but I just had to give example because of we had this. But the broker that I used before when I took this trade, there was no this. But you can see this is still an 8 now, no matter how you see it. But broker I used before, that thing is not there. No, most of these brokers and they're whatever. So now after this guy got taken out, the most recent key level entry we had was this. Now this key level entry was in line with mitigation block. Now the question I asked most people that took this sell with mitigation block was, where was your SL? If you said you used, because this candle you can't even use 50% of this candle, you can't even use 75%. What you should be using here is like 25% or thereabouts, which may likely miss entry because it should be around here. I think here 1, 2, 3. If you don't miss entry, you should be snipe 1, 2, 3, 4. Okay, yeah, like 25%. So that was where this key level came in. Now price turned this support to become a resistance. Resistance is used for sell, support is used for buy. Why is it called support? Because it's just like a bouncing area where price should, let me just use for example, you're climbing a stairs, and then you have a ladder, and then that ladder now is like your support to climb up. Okay, and then resistance is just like somebody now use what should I use? Somebody put knife or something in between your ladder that is not allowing you to climb up. That becomes your resistance. Okay, so now this is a resistance. You can see that as soon as price got to this point, it rejected. Now because I cannot cover these two candles, because this is too big. What did I do? I covered one. I made sure to cover one. I think, where was that guy? Okay, I think I did not even cover one of them because it was still big. Okay. Look at, I used this because these candles were big. I used this. Now I see. I used this. But I had that will I say belief or something that the trade will hold. Why? Number one, it's in line with the structure. That's why I was saying last night that everybody shouting key level this, key level that, insulting me, calling me whatever because of these same key levels. I said it that if you do not know your structure, you're still going to tag me in the group. Why did this key level fail? If you check on Twitter, a lot of people are trading with this. It's not even my strategy. It's not even my entry model. As a matter of fact, I just got to know about it. I'm a very inquisitive person. So once I saw this first from my mentor's chat, and I did not go directly to him to ask him that he should teach me. It was, I think, since 2023 he taught me. So because it was a lifetime mentorship, but because it's a lifetime mentorship, I cannot just go back disrespectfully like, please teach me, or how did you get your entry or something. I calmed down to do my own research on my own. When I was done, I knew what it was all about, but I needed to know deep down about it. That was when I sent him a DM, and then I asked him, please, can I know the name of this thing? I have been observing it in your entry. Then he said okay. He did not even tell me that we'll have a section. He sent me a YouTube link first. After watching it, I understood, and then I said I needed more private section on this. Then I paid somebody else I saw on Telegram that used it and had a better win rates, and he had a track record on that. So yeah, like I was saying, and then that was how this sell got about. So everything lies in your structure. Then after that, we had, I think this should be a field external, because we had guy number 1 and guy number 2. Okay, we later had this and this. Okay, so then we had this guy here as our inducement. Can see where I marked here. This was a key level that failed. This was a resistance that failed. That's why I put this here. So after this inducement got taken out, I wondered what happened. Then I realized that price came to reclaim this, but I did not enter. Why did I not enter? Because where will I put my SL? Fair enough, there is this little guy here on equal highs. Okay, but after it got taken out, I observed something. I trade more of confirmation, continuation than reversals. Okay, that's why I see that I mostly trade mitigation block key levels than reclamation. Reclamation is used for reversals. Okay, and these are used for trending market that when price is moving. So after price took out this guy, the disruption, I have told the people before, no matter how clean the price action, you will never find me trading directly at a point of interest. They'll say because this is this, and then I just put my entry here. I would rather allow that point of interest get taken out and reclaimed, and then I use a continuation, or I enter at reclamation. So after this was taken out, price reclaimed it, and then it gave us this guy over here. Okay, which is this. So this was support that turned into a resistance, broke with the body, and then price came there and then it sold. After that, what happened? Price later came back to take away let me take out this. Okay, price that came back to take away this over here. So after price took out these two, it's a confirmation that was, especially this high, because it was a failed external. After price took it out, a confirmation that we should be buying. And then I got a few more entries. Now this is not a key level entry. It broke with the week. This is not correct. Okay, but then after that, what happened? Price came down to this point, gave us this next one, broke with the body, and you can see I protected this though because it was something I could risk. This was over 450 something pips, so I could risk this, so it was not a problem for me. Then I think after that we had so after that we had, I think the next entry we had was this. Okay, price bought it, that was not worthy. Was not worthy. So the next one we had was this one. Okay, so we had, I think we had one here, but the issue was that if I should take this, then my SL has to be below here. So two things would have happened if I had taken, well, I actually stick to this because I just wanted that. The risk was too much for me, but I took this because it was still in line with this, and I wondered, and I said to myself, if I take this now, possibly if price would want to like roam about this guy here without tapping on it, then it should trigger me, and that was what happened. So that's still experience. And then I got this out. Then, like I said, if one fails, okay, we didn't even have anyone here. That was all for that. And then we had price creating a new internal, creating a new internal, taking out this guy, and then creating this. I think this should be a field external, so let me check. Okay, but then before that, what happened? This could also be seen as a flip zone, but still key level. I told you, price takes out a point. So now this high taking out the body of the candle, I protected it with this, so that was how I did not take a loss there. After that, I protected it with this low. All of these trades, I posted all of them on X. I took all of them. So now most of the reason why I don't give signals to people or I don't like dropping my setup is because I cannot control their emotions. Just like what has been happening in the group for quite some time now. To most people talking, they feel like they are just mere words, but the truth of everything is that I'm still a human being like every other person. So those things has an impact because they are words that are said to be like a person. Okay, so it's not actually a big deal dropping all this setup or something, but I cannot control your emotions on the outcome, but I can control them on my own self, my account and everything. So this was taken out and we had that. Then after that we had We had this guy here. I did not take that one. Why did I not take it? Let me try to find out. So we had this guy here as the internal that was taken out, and this second guy as disruption. Fair enough. And we had a key level entry. Probably I was not online or something, but I did not take it. This one here, I told you I did not take this one. This was it. Maybe I did not know where to keep my Excel or something, but I did not take it. But this is an entry over here and held. Then after that, price sold down until price created a new let's check. I want to check if this is a fade external. No, this is just an internal. All of these are inducements. Okay, price created this. Trying to check. Yeah, and then he reclaimed after taking it out. He reclaimed it, and then we had this key level price missed it, and I think he held with mitigation block. I didn't get to this point. There are actually people that once this though I don't trade it like that. I've not really back tested that one. Once this candle closes below or above that equal low or high, the next candle is their own entry. They use it to stack till that candle closes and then follow up. But I don't trade like that because you don't know how long that candle may be. Okay, you don't know how long that candle may be. For example, now looking at this one, after this candle closes above here, imagine you start stacking, hoping that it comes down to this entry, and then that's a lot. Okay, but some people, once this guy has closed, they want to enter with the next candle, but it's not really advisable. Okay, that's not a good way to trade. So then okay, I think this is not correct. This is not correct. It's not correct. I just saw that price closed. There was a weak interference, so that's not correct. What held here was mitigation block. Fair enough. I just saw this week now, not the body. So, and then what we had next was price taking out the inducement, and then we had the distortion over here that was taken out. Could also be seen as the flip zone. I explained it to you guys before. That was the how I got this entry. And then my SL was just below, I think. Okay, below this one. I don't have a definite SL. Sometimes I won't say it's my intuition anyway, but it's just an experience. Sometimes I may likely cover just this one. Depends on the risk anyway. But I wouldn't want to risk on to up to like 1,000 pips. So that this guy, we had this, and price missed this, and then we had this one. Was the one I took at, I think that was 11 a.m. spread. This trade, it's TPV spread 1 to 5, the fastest I've ever gotten. I think I posted it. So he had this equal lows, this one, and then price came to it, and 1 to 5 in less than 1 hour. We had this guy. I used this guy to put my SL because I can't go below this to this. That was too much. And After that, we had inducement here, disruption, price reclaimed, but I think what was the most recent was this or so. Trying to figure out, should be this. Price bought for a while. I did not even take any of this trade. Then bought for a while up to this point. So let's see how many next reward if we're using this low. I want to put this this like just 1 to 3, not so much, very small. I used to do like 1 to 5 with this. That's minimum. Okay, then I think well the next internal created was it actually was not even a valid internal, I guess, because there's no structural liquidity. So probably that just came back to take out this guy. And then I think there was no key level entry here. It was this one. After this low was taken out, what was used here is a mitigation block. That was this entry. A lot of trades. And then this is an internal and a disruption. This an inducement, a disruption, reclaimed, and let me label it. This is a disruption, an inducement. Price took it out. There's no possible place to reclaim it. Took out this other guy. Tried to reclaim it a bit. I tried to follow up with the continuation. I got a snubbed entry, took it out, came back, took it out, and then we started buying. And no entry here. Close with the week. Close with the week as well. Basically, no entry. Okay, we had this guy here, but I did not enter it anyway. We had this guy that played out. Just needed something a bit clear, but I think my mentor took this one, my boss, because I saw it, he posted it on Twitter. He took this, so this was right. You could put your SL here, because this guy is giving over 1,000 something. And then after this was the next guy. Don't mind me as I use this rectangle tool in this one. These are actually key levels as well. Okay, then I used this guy like this too, and this could also be seen as mitigation block. Sometimes they both align. Some mitigation blocks fortunately sometimes be on the same page as key levels. And then this was taken out. This was so good until where price currently is. So that is all. So like I said before, if you have problem with structure, please just go back to structure, because you can see that everything I was doing here, I was showing you inducement, disruption, showing you when there was a change of trend. And so far so good. The losses we had here were not even up to 4, but you could count above, or just one missed entry, and you could count how many of the trades we got. So everything together, social liquidity, every add-ons, is what makes this Abigail strategy. And my continuous learning is what increases my winning rate. So I'll be stopping here for now till I drop a video for the slow learners on market structure on Monday. So that will be all. I'll be taking any question. I will. I'll open that group by tomorrow. I just hope everybody must have watched the video by tomorrow. Your question should just drop it there. But for now, watch it 3 to 4 times before tomorrow 12 p.m. when I will open the question group. Let me just compress the video right away. So have a nice and good week ahead.